Hi guys, today is April 30th, 2020 and futures are pointing higher and jobless claims came in at 3.8 million weekly jobless claims, and that means that 3.8 million Americans filed for unemployment, but still optimism is very high. People are jumping head first into stocks, but I would be very careful at this point because we still don't know how we're going to open and how this COVID-19 outbreak affected companies' sales. I mean, so far the reports were pretty good, but in some cases it was not very good, so a mixed bag. So let's jump to S&P 500. SPY. So SPY is higher, but again, I'm very cautious because it's trading 24 times PE, and that's very high for SPY. I mean, it's trading lower this morning, and I think we can go lower from here for at least a couple of days, to me, but who knows what's going to happen. But in general, we'll be very careful with buying stocks. Microsoft reported a pretty good quarter. They said that the coronavirus had limited effect on their revenue, delivered big beat and on earnings and sales. And in general, it's one of my favorite stocks on the market. And I think if it falls, it's a pretty good buy. So Qualcomm reported, said that Q2 rose 5% to 5.22 billion, beat 504 billion estimate. EPS, which is earnings per share, missed estimates and sees Q3 in line. Well, in general, Qualcomm is a decent stock to buy, but I would wait a little bit for this to drop a little bit because, I mean, they didn't report a spectacular quarter, so it could trade a little bit lower so you can pick up shares in general, but it's a good company to own. So FB, Facebook. They reported very good numbers, though missed on earnings, beat on revenue. Daily active users up 11% year over year, monthly active users up 10% year over year. So it's a pretty good quarter, but in general, Facebook is too high for me to get in right now. So I'd like it to drop under $200 to buy it. Tesla. Okay, Tesla had a spectacular quarter. Actually reported that it earned $1.24 versus expected 36 cents loss, and expects to deliver over 500,000 vehicles that it was projected. And profit guidance, though, was on hold due to COVID-19 outbreak. But in general, spectacular quarter from Tesla, unexpected. But a lot of hedge fund managers and money managers were yelling and screaming that Tesla is too high. I think it's not too high. I think it's going higher, and I'm pretty convinced that eventually it's going to go over $1,000. But the main thing is that you have to listen to a conference call by Elon Musk. That's something to hear, because this guy is very outspoken, and he called the stay-at-home orders fascist on his conference call. And he also said the interesting part that they're thinking about to get into HVAC business, and they want to develop HVACs, Musk does, that will filter out viruses, pollen, and other things. So that could be a very interesting story to develop. And in general, I think Tesla is a buy. Moderna had some news because the BMO initiated coverage without perform rating with an 83 price target. I think Moderna is a little bit too high for me. I mean, probably mid 40s, lower a little bit. It's a good time to get into Moderna. MRKR. Therapeutics. That's a smaller company. It's a small bio company, and they said that Marker received FDA orphan drug designation for its T-cell therapy for acute myeloid leukemia. So that could be a good swing trade candidate. I mean, if it opens higher, it goes a little bit lower, and maybe it's a good time to pick up shares. Okay, so UCTT. Ultra Clean, it develops like tools for semiconductor industry. It's delivered excellent quarter, provided strong guidance, a healthy balance sheet. I think it's a pretty good company to own. UCTT. Okay, ultra clean, and if it drops a little bit at the open, I mean, maybe it's time to buy it under $20. AGNC. AGNC is the REIT. Basically, it delivered pretty strong results. Q1 results were 57 cents versus 56 cents expected. Tangible book value was $13.62 and 93 billion in investment portfolio, and pretty good results from AGNC. Actually, I think it's trading too low. I think it's a pretty good pickup in my mind. Okay. Annaly also reported pretty good earnings and reported 21 cents versus 21 cents expected, but recently analysts sent a shareholder letter where they explained their liquidity, where they are in general in this market, mortgage-backed securities, and I think they have a very strong balance sheet, and I think Annaly is a long-term buy and hold. They pay pretty good dividend, and this is a good stock to own in general. Okay, Twitter reported pretty good earnings, actually strong results. EPS 11 cents, beat by 1 cent. Monetizable daily active users 133 million versus fourth quarter 121 million, but provided no guidance and soft talk on the conference call a little bit, so the shares are lower, and I think it's a pretty good pickup on a sell-off. Okay, CMCSA. Comcast beat the estimates by 3 cents. Revenue came in below, added record number of high-speed internet customers. But in general, I think it could come down a little bit on these results, and could be a good opportunity to get into the stock in mid-30s. MCD. Okay, McDonald's. McDonald's delivered... they fell at 10 cents below street estimates. Revenue beat strong sales prior to COVID-19, but in general, McDonald's is trading a bit too high for me. But if it comes down a little bit lower, I'd like it to come down a lot lower, like in 170s, low 170s. That would be a good opportunity to get in. But in general, in this environment, I don't know if I want to be in McDonald's right now. Okay, same thing with Dunkin' Donuts. They reported also numbers, DNKN. Dunkin' Donuts reported beat by 5 cents. Revenue also topped estimates. Sales, though, dropped 19% in the final 3 weeks. 3 weeks of the quarter, and in general, I think Dunkin' Donuts is also trading a little bit too high. I'd like it to come down under $60 to buy it. KHC. Okay, Kraft Heinz, and they provided a pretty good update. EPS 3 cents above estimates. Revenue top as well. Benefited from increased demand in Q1 as people were stacking up the shelves. So that's a pretty good stock to own in this environment. I think it came down a lot and pays pretty healthy dividend, and I think it's a good buy in my opinion. Kraft Heinz. Okay, eBay provided an update and reported very strong Q1, 5 cents above, stronger guidance, though they said that their classified business took a hit because a lot of car dealerships were closed and ad spending didn't pick up as fast as they hoped, and so the stock is lower a little bit, but I think it's a pretty good buy on a pullback, actually, eBay, though it had a big run. But I think like if it comes down to like 35 around area, I think it's a pretty good buy in my opinion. Okay, MESO had some news. MESO Blast. And they said that they announced enrollment into a phase 2 and 3 placebo-controlled trial. They're gonna enroll 300 people, and to confirm their results from the recent study when they had 12 patients and 10 of them came off the ventilator, which was huge news, and stock ran a lot. But in general, MESO is trading a little bit lower pre-market. I think it's a pretty good buy in my opinion in this area. Mesoblast and NVCR. Okay, NVCR reported very strong results as well. They have 4 phase 3 trials, and they have a very strong balance sheet. And I mean, they pushed off the results of their trials due to COVID-19, but in general, NVCR is the stock to buy. This is the stock I think that could actually double in the coming like maybe a year or two if they report pretty good results for their phase 3 trials. So NVCR is a stock to watch, and I think it's a stock to get in right now. LVCS, okay, Las Vegas Sands. They said, Las Vegas Sands reported that Nevada governor extended stay-at-home orders and said that casinos may open a 3rd and 4th phase. That could be a month from now. So in general, I think casino stocks ran way too much, and I think in this environment, and I think it's gonna come down, in my opinion. But who knows what's gonna happen? As well as Wynn Resorts, it's also ran too much, I think, in my opinion, due to this COVID-19 crisis. We don't know what's going to happen and how people will come into casino, how they're going to sit at the tables like 6 feet apart or what. I mean, I don't even know how it's going to look like. So these casino stocks, people are jumping in, and I would be very careful with casino stocks. And the same thing with MGM. I mean, it ran a lot as well, and I think these casino stocks I wouldn't be buying, at least not right now. Okay, so AAL reported that why there's an expected loss, revenue lower than expected, 6.8 billion in liquidity, and it will have 11 billion in liquidity in Q2. Again, AAL has a lot of debt, and compared to other airlines, is not as good as not well leveraged as other airlines. I actually like Delta Airlines, even though it's trading lower this morning because of the AAL results, and I like JetBlue. Okay, JetBlue. And the last one, but not least, is COP, ConocoPhillips. ConocoPhillips reported beat adjusted based on adjusted expectation, maintained the dividend, and in general, I was impressed by ConocoPhillips earnings. And in general, I don't like to own any oil stocks, but ConocoPhillips is one of the stocks that could be owned if you like oil stocks, and also CVX. Chevron is also a stock on a pullback that I would own if you want to own oil stocks. But in general, I like refiners, stocks like VLO and MPC. Okay, Marathon Petroleum on a pullback. Okay, all right, that's it, guys. That's the wrap for today. Don't forget to subscribe to my channel, click the like button, and I'll see you tomorrow.